Hello world, welcome back to my channel. If you're new here, my name is Tommy and every week I make videos about personal finance, investment strategies and everything in between. If such topics interest you, subscribe to join our community of like-minded individuals. Today we're going to discuss Alibaba Group's latest annual report. We'll go through their cash flow statements and try to come up with an intrinsic value estimate for the stock. Let's get started, shall we? Here's Alibaba's annual report for fiscal 2021. Note that their fiscal year ends on March 31st, so 2022 numbers are not included. And for that, we have to look at their interim report or other earnings calls. So, the Alibaba ecosystem GMV has grown to over 1.2 trillion US dollars, which is amazing. The China retail marketplace's GMV has grown to over 1.1 trillion US dollars. And globally, they have over 1 billion annual active customers. China is still their main market with 891 million AACs. The international market for them is growing as well. 240 million is no small number. And I'd like to see more progress in their international expansion through platforms such as Lazada and AliExpress. Next, let's take a look at their cash flow statement. So the annual report has many other statements, but I believe this is the most important. In 2021, they made 26.3 billion US dollars. And let's compare this in US dollars with their 2022 numbers. So in 2022, they made 18.4 billion US dollars. So the increase is astounding. Although I would say that investors should not expect this kind of growth every single year, since for between March 2020 and March 2021, a lot of the increased spending we explained through COVID, where more people were working from home and buying more things online. So if we were to look at the free cash flow trend for the past 5 years, you can see that it's been growing steadily. And putting this into a CAGR calculator, we can see that the past 5 years growth for their free cash flow has been 27.48%. which is very high for a company of their size. Next, I want to take a look at their profit margins. In 2021, their operating margin was around 11%. However, this is a kind of an all-time low for them. You can see it's been decreasing from almost 30% 5 years ago. So whether this would stabilize or not would affect our decisions on the potential of Alibaba Group. Comparing this with a peer like Amazon, which has around 5% operating margin, I would think that the trend would continue and they would decline to closer to that number. The notable exception to this would depend on their cloud business, because cloud computing has much higher margins than other business segments, or at least has the potential to have higher margins. So one thing that was curious was that their net margin has been consistently higher than their operating margin. And at first I was quite puzzled by this, but I found a good answer online on why this could be. So, it is possible for a company to have net margin higher than operating margin in cases where their non-operating revenues are more than the sum of interest and tax. So what this means is that Alibaba doesn't have to pay a lot of tax or interest on their loans. This can happen when they are in an industry that the government actually supports. Next, let's take a look at their annual active customers. Since 2019, they had 674 million annual active customers, and it's grown to 811. And this is amazing because it shows that while they are already very dominant in China, they continue to penetrate the market. However, there is one thing of concern for me. Depending on the numbers you believe, China's population is shrinking at various rates. So it's possible that China's population is actually closer to 1.28 billion rather than the 1.41 billion census. So if it is true that they are over-reporting their population, so it means that Alibaba would have a smaller total addressable market than you might think. So right now they are at 811 million annual active customers, and based on their historical growth rate, which was around 11%, we compound this over 3 years, and you can see that it's already very close to the entire population of China, which means their global expansion is super important. Next, let's take a look at their international commerce. So, their international commerce retail has grown from 24 billion renminbi to 34 billion. And the international commerce wholesale has grown as well, from 9 billion plus to 14 billion plus. This shows really strong numbers. In fact, most if not all of their BUs are doing well, like core commerce, cloud computing, digital media and entertainment, and even other bets. Next, let's look at some of the challenges that they are facing. So there are many here, and I encourage you to read the whole thing for yourself, but I would highlight the ones that I think are most important. So the first most important one would be the ability for Alibaba Group to replicate and adapt their procedures, such as technology and logistics, outside of China. So I think this is not so straightforward and is a challenge that they will be facing. Secondly, geopolitics. So I think that this is quite well described. So protectionist or national security policies can restrict their ability to invest or acquire companies overseas, develop, import or export certain technologies, or utilize technologies that are deemed to pose a threat to national security. Thirdly, the privacy laws and data security laws, including GDPR and other compliance costs, can be very high. So depending on their ability to comply with different regulators, this can affect their ability to grow in international markets. Alright, so now let's put together the numbers that we found and try to give an estimate on the fair value of the stock based on certain assumptions. So as of this recording, Alibaba is priced at around $315 billion. The free cash flow for their fiscal 2021 is $26.353 billion. And let's say I want to beat the market significantly. Instead of 10%, I want 15% on my money. I also have to consider that any shares that I buy can get diluted. And historically, Alibaba has diluted shareholders around 2 to 3%. So I'm going to assume that my desired yield should be 18%. So let's call this yield 18%. So this is our target. Now, let's take the worst case scenario, or a very pessimistic scenario, where instead of growing at 27% CAGR in the past, moving forward, let's say Alibaba Group grows at only 15%. So let's calculate the free cash flow on that in 5 years. So we take the current free cash flow and multiply that by the growth rate, which is 15%, an increase of 15% over 5 years. This gives us a future free cash flow of 53 billion. Now we can calculate the price. So in this scenario, the price would be free cash flow over our expected yield. So if you recall, the reason why we're calculating this way is because the inverse of price to free cash flow ratio is actually the yield. So we can take their future free cash flow of 53 billion and divide it by our expectations, which is 18%. And this gives us a current price of $294 billion, which is not very far from the current price. So I would say that this is close to fair. So the current price is fair or slightly expensive, if these are your assumptions. For the second scenario, let's say that Alibaba grows around 20% instead of the 27% historically. The free cash flow on that would be then 26.353 multiplied by 1.2 over 5 years. And that gives us a future free cash flow of 65.57 billion. So to calculate the price we should be willing to pay for such a company would be to take that number and divide it by our expectations, same as in scenario A, which is 65.57 over 0.18. And that gives us 364 billion. So relative to their current valuation, which is 315, it is around 15% undervalued. So I think this is the most likely scenario, and this is the number that I'm pricing it at. So at current levels, the stock is actually slightly undervalued, and it will be suitable for me to continue dollar cost averaging in. It is also possible that they beat this growth because of two things: cloud computing and their international expansion. Of course, the risks are still there, so make sure you do your own due diligence before making any decisions. We hope you've enjoyed our analysis of Alibaba Group. As a disclaimer, I am personally long on the stock, but you should do your own due diligence before making any decisions in the stock market. If you'd like to hear more from us, subscribe to our channel to get notified every time we release new videos. Gently tap the thumbs up button for the almighty YouTube algorithm, and if you found this helpful, share this with your friends and family. We'll see you in the next video.